Hello and welcome back to CryptoAvenue. Nice that you tuned in. Today another video. I was off for a couple of days. I had to work a lot and then I had a small surgery, nothing major. So this is the reason why I couldn't upload any video. So today I want to speak about Bitcoin. For those of you who are not following me on Twitter or on Instagram, you can do that. It's crypto_avenue. I will pop that up here on the screen. I was posting a couple of pictures about my trading ideas that I have or that I had, and I want to speak about one trading idea that you see right here on the screen. Please follow me if you want to have a little bit more content, because as I told you, I'm working 9 to 5 and don't have the time to upload too much, but I can and will, and I do upload more on other social media platforms. So let's dive into this. Yesterday I posted actually this one. Sorry guys. So before all of these hype that we had regarding to the Segwit 2x fork, where basically everybody jumped into Bitcoin because they expected the free money with the Bitcoin 2x, and it doesn't happen. So they decided not to fork it right now. I mean, there's still rumors if it will fork on the 17th, but I'm not pretty sure if this is so, if it will come or if the impact is that big. So let me jump to the daily chart just to give you an overall picture. First of all, the first thing you have to do whenever you trade, before you set in a trade, go and have a look on a longer time horizon. First major thing is have a look on a daily chart on a longer horizon and look what the overall trend is and where we are at the overall trend. For example, the overall trend since January is up. So we have a huge bull run the whole year. But in all trends, you have, as you see here, or here, or there, or here, you have corrections or consolidations, however you want to name it. So this is important to see. Are we now on the up run, or are we in a consolidation phase? So overall, first of all, you see up run. Second of all, if we zoom in, we had the last bull run to the all-time high at 7,809-ish around. So then the Segwit 2x fork was cancelled and we came down to around 5,700. Let me go to the hour chart. Back to the hourly chart. So here we are. Before I do that, I want to go to the daily again. We spoke about support and resistance. So this is our new resistance level, the all-time high. And the support levels were around, somewhere around here. It's hard to spot. I mean, it would be around here, but we broke through that. So the next support level was this here. So when you have such close support levels, what I do is I don't fix just on the first one or on this one. I take kind of an average, because you see you don't have that clear support levels as you may see somewhere else. I mean, okay, we had this one, we broke through, we went down. Yeah, as you see, first of all, it's not always perfect, most of the time not. So you cannot really spot the point, the exact support point. So this is why I always speak about just take the area around it, couple of percentage points, whatever. And then you can say, if you say, okay, I want to go in a position on the support level, just split it in 3. Just say, okay, I will buy one tranche, let's say a couple of points or dollars about the support level, the exact support line. The other 33% at this line, if it goes down to this line, and if it goes deeper, the other third. This is a way to actually secure that you get your entry. Yeah, or secure to get a better entry, or to fill your position. This is the first thing. So we saw, let's now go to the hourly chart. Okay, let me scroll out. So we had a correction round about, let us have a look. Okay, a great correction of 30%, which is great. It's always good after having a huge bull run to let the market correct itself and then keep the eyes open and look for confirmation for your entry. Speaking about confirmation, what is a confirmation? We talk about how trends look, higher highs and higher lows. This is the first thing you can do. So let's play the scenario. We went down. Okay. We see here we have lower lows as we had here, for example. We went up, lower high. First indication of, okay, something wrong here. Maybe the trend is changing direction. Keep an eye on, if you are in a trade, then be prepared to go out of the trade. Could be, that when you are here in this position, that is just going sideways, consolidating, then going up again. If not, and that is what we saw here, it's going down. We have, kind of lower lows, not really. We go sideways again. We dip again here. We go up, lower high. This should be the signal for you, okay? The trend is broken. I mean, this took 1.5 days, and then you see, whoop, we went down through this former support levels, these former support level here that we had all the time. Very fast, great signal that the trend is changing. Go out of your position or short this one. So then you're waiting. Basically, you're waiting then to see confirmation for the next bull run. Okay, high, lower high, lower low, lower high, lower low, lower high, lower low. Extreme sell-off here. We dipped here around 5,560. Huge bull run. Huge bull run now. Huge bounce back. Very fast within 4 hours, like from 5.5 to 6.4. Still wait, because still we don't have a higher high. We came back, but you see, we spoke about high volumes, and when you see high volumes, for every seller there has to be a buyer. So you see the Bitcoin switching over from the sellers to the buyers. High volume, that means high turnover of the coins. Keep that in mind. Whenever you see such high volume, there is something happening. As you see this, comparing to this, you see the yellowish line here or orange line here. This is the average of the volume. You see we went, that's double the value of the or amount or volume of the normal average volume. So this is an important point to see. And then we consolidated again, not nearly to this level, but very close, and again high volume. Again high volume here. You can't maybe see it because I have this red thing here, but it was again a high volume. So what happened now? You see 2 times big volume coming in. First alarm sign for you. Okay, probably the trend will change. or at least could be a good entry point to set a trade, as long as the trade is going up. But for all beginners which want to trade more actively, so if you not active, let's say you buy and hold for a couple of weeks or months, that could be a great point. But again, for more experienced one, outside of you, outside, or if you don't mind, if you have a 10 years horizon or 5 years horizon, you don't mind if the price could go more down to 2,500 or whatever, it's fine. Otherwise, there's still not a very clear confirmation that the trend goes up, because we need higher highs and higher lows. So if you're actively trading, don't grab the falling knife. I hear this so often on the internet. They say, dollar cost average. Yeah. So buy when the price is going down. I mean, imagine you doing that. You could be lucky and you still have money on your account and you can survive this trade. So you buy, you're running out of money, but luckily the price is going up, okay? And you realize gains, or not realize, but you realize after you sell them, but your profit and loss looks good. But usually never do this, especially if you're unexperienced and especially if you don't have a lot of money on your account. I would never suggest, because you never know how deeper this will fall. And then you're sitting there with a 70, 60, 80% loss position, and the emotions are coming in and you're like, fuck, what should I do? I mean, I put, 1,000 in this position, for example. And you're sitting there, the emotions are coming in, and maybe you sell them then with an 80% loss. Yeah. And then 2-3 months later, you would be in plus. But the point is, never underestimate the psychology of trading. And when you really lose money, you don't act rational. It is how it is. So never grab a falling knife. Never, ever. Except you a professional. So, okay. So we dipped, bounced up. We dipped again, and then look at this. Huge bull run. Higher high than here. Also higher high than here. We went down. Up again. So we had a higher low as here. First indication of, okay, this looks like an uptrend. Now you have to be prepared. And this was the point, I guess somewhere around here. I don't know. Yesterday, I posted on Twitter, I posted on Instagram, and I posted it on Tradingview. Tradingview is connected to Twitter. That a new trade opportunity is coming up. And I was not telling you that you have to trade to the upside or the downside. You can never be 100% sure. As a trader, speaking about more active trader, not someone who's holding months or weeks or whatever, you adopt to the market. You are not dictating the market where to go. You don't know it. You can't influence the market with that little amount that you have. You have to adopt to the market. That means you're looking now at the price, higher high, higher low, and then we have a sideways trend. What you can do, what I suggest that you can do, you can draw some lines. So as I did here, like a box where I had this upper range and the lower range. And this is my consolidation range. Within this range, I'm doing nothing. I'm just watching the price action and waiting for a signal, or better for a breakout. A breakout, range breakout. This is the right word that I was searching. And this is what I did, and this is what I posted as well. Look for a breakout to the downside or upside. Now, what happened today? I thought actually it would happen yesterday with the US market, but the whole time the market was flat. Now, Asia came in and Europe, and you see what happened. We broke through this consolidation area or range at 6,777. We broke out, two couple of hours ago, and you see we had a great bull run. So it could be also the other side. It could be that you have a false breakout and the price is coming back and going down. But we know that you have to know that after a time of a consolidation, after a quiet time where the price is just going slightly sideways, there will be a time where more movement, more action will happen. And actually, this is the best time for you when the price is not when the price is not that volatile, so it's going sideways. Then you have your time to set your entries and say, okay, good. Make up your mind and say, good. When I will set a trade on the upper line or on the upper range, and a short trade on the lower range if you can short the Bitcoin or not, if you can short it, and or if you just a long only trader, you can say, okay, I want to sell here again, whatever. But basically, make up your mind, have a look, set your trade here. If you're trading the breakout, if you did, beautiful. We had a good run. Just let me see how much percentage. If you went in at the breakout area, around 7% now. That's okay. That's quite a good return that you get here. If you're more brave, if you're not scared, I mean, you could go in earlier, somewhere around here. But I would never suggest that to do as a beginner. Wait for confirmations, and the first confirmation, as more confirmations you get, the better it is for you. First confirmation, higher high, higher low. Okay, sideways, this is your breakout area. I would always suggest as a beginner or not that experienced trader, set your trade at the breakout levels. Get comfortable with that first. Later on, after a couple of months or a year or two, whatever, after longer time horizon where you had more trades and you have more experience, then you can start to try at least with little amounts to go earlier into positions to anticipate them. There are pros and cons, of course. The pro, let's say you're that brave and you go in here because you anticipate, okay, we have a double bottom. I see volume coming in. I buy into this position. Okay? Pro. First of all, the return that you would have today, obviously, here, would be not 7, but 28. Like 4x. The return is great. But of course, the downside is if you're wrong and the price collapse, you're losing money. And the most important thing is to have a proper risk management, cut your losses, and do not lose too much money of your trading capital, because because you have to survive another day to trade. You know, there will be much more opportunities the next day or the day after where you can trade and probably make good gains. Because think about that. Just speaking about risk management. Let's say you lose 50% of your capital. You go in this trade, the price goes 50% down, you had 5,000, or let's take a round number, you have 1,000 euros, dollars. You lose 50%, you have 500. So you lost 50%. But to make this $500 like to come break even again, it's not enough to gain 50%. You have to gain 100%. Then you break even on $1,000 again. So this is why cut your losses and let your winners run as long as they can. What I did in trading CFDs or Forex, I limited my risk to my overall risk on my portfolio around 1%, 0.5, 1, 1.5. Depends on the volatility, depends on the overall market conditions, depending on my trading capital. So there is some kind of rule outside that you say never risk more than 1% of your portfolio. Because by cutting your losses and letting your winners run, because as we spoke about trends or the movement, the direction of the trend tends to be longer than you think. The trend is your friend basically in that case. Cut your losses, and if you are in a good trend, try to stay as long as you can in this trend. Take your stop loss higher and higher. I will make a video about this as well, but now I just wanted to speak about this here. If you're interested, stay tuned to my channel, because I will speak about every aspect or a lot of aspects regarding to trading, and this will be very informative for you and you will learn a lot. But not today. Today I just wanted to speak about this particular trading idea that I had and that I shared on Twitter, Instagram, and Tradingview. Okay, so what did we learn today? First of all, have a look on the overall market condition. Take the daily chart. Have a look what the broader view on the market is. Do we have a bull run, bear run, or are we sideways? Because this predicts the trades that we can choose, first of all. Then have a look. Okay, we are on the bull run. Are we now in a correction phase, or are we now in a trend phase? Here we are in a correction phase. And now we are in the trend phase again. Okay, that's the first look that you should have. Go to a smaller time horizon, the hourly chart, the 4-hourly chart, depends on which time horizon you want to trade, and have a look if you see good entry positions to set a trade. Drew always support and resistance lines inside the chart, because they will help you to see like where the price could change direction. Doesn't matter which way it change direction, to the downside or to the upside, but drew these lines to give you like I don't know how to say in English, but give you some levels for you to have an eye on. Okay, this is the second one I want to trade, and today as the thing that I wanted to speak about is a breakout range. If you see something like that where you have a longer consolidation, just basic trading, drew a box or line, whatever, where the trend is where the price is trending within, and then trade the breakout. Look how the price is behaving. Look how it's behaving. Okay, it's not happening that much, but it will. It will always. The price will not be fix around $6,600. There will be a time where the market is deciding the direction, and they did today. We broke out through this level. We broke through resistance levels around $7,000 here. The former support, which were resistant, now we broke through clearly. So my personal opinion is that if nothing major happens, and it can happen everything every day, something unexpected, but if the market stays like that, I expect, as we see here, the red candle, a little pullback again around these levels, maybe also around here, but I wouldn't think that. I would say we will end up somewhere in this green area around $7,000. And yeah, because what you see often in a trade, we spoke about resistance and support lines. Former resistance becomes most likely support. So I guess we see support levels around here, and then see the next up run. And in my opinion, we will test the all-time highs. If we will break through, I don't know. You're probably asking yourself, what is this crazy black line? This is what I wanted to show you at the end. What you do in technical analysis, I don't do that often, but I did it today just to see where we could go. I just took this trend, the length of this trend. I just copy pasted that and put it on the breakout area to see where we could end up. As I said, TA is never 100% sure, but it is within the name. It's a technical indicator. It indicates something. It's not a technical sureness. Yeah. So you can't be sure, but it indicates you something. As a technical indicator or as a trader, you have to, or you're looking for movement, for trends, where they go, when they could appear, when they could change. And this is what we do. I looked at this length, and you project this on here to get an estimation where we could end, and you see we ending somewhere around the all-time high. It will not, I guess, not test today, but it could be in 1, 2, 3 days, 4 days, 5 days maximum, I guess, if nothing major changed. We will probably see testing the all-time high. Maybe we will broke through it. And again, let me delete this. As I said, I usually not using that too often. This is what I wanted to tell you today. It's a very raw video, but I wanted to shoot another video because I was off so many days, and it was very, very interesting to see that. So please subscribe to my channel because you will love the content that I give you. You will learn a lot about trading, about technical analysis, and the overall market conditions. So hit the subscribe button, hit the notification bell so that you don't miss when I upload videos. Leave me a comment if you have a question, or leave me a comment if you had a trade like that or whatever. And share the video if you think this is that gave you some good value, and your friend or whoever should see that. Just share it on social media. Follow me on Twitter and follow me on Instagram, where I post more often screenshots and trading ideas, and on Instagram some little bit of private stuff that I'm doing when I'm out for a drink or for food or whatever. So thank you for tuning in. I hope you learned a little bit today. This was just a very raw video. Thank you very much. See you, stay happy, stay healthy, and happy trading.